Stocks are poised for a pullback, and we have most call options since January 2022. We look at junk debt, and it is currently at first support. Will it hold there? The Japanese yen unexpectedly went into a downtrend, and this, making the dollar stronger, is casting doubt on gold rally. And Bitcoin and Ethereum rally continues despite actions from Securities and Exchange Commissions, all in the more various stock-related topics in today's MasterChartsTrading.com market recap from Friday, June 23rd, 2023. This is Alexander. Please don't forget to like, share, comment on this video. This will help me tremendously promote the videos. So please don't forget to do that. Let's get to it. Today I wanted to start with this unusual chart. I don't normally use this, but it's kind of interesting, and I wanted to share it and possibly get some feedback from you. Let's see what you guys are thinking. So this is what is called a Chicago Board of Options Exchange options total put to call ratio. So think about it as a currency pair, put, call. So put on the top, call on the bottom, and this is the top part right here. This is just S&P 500 down below here. So additionally, what I did is I didn't put the actual number for put call ratio because it's all over the place. What I did is I took exponential moving average, 10-day exponential moving average of put call ratio to smooth it out. And it's sort of like a reverse indicator. Usually when there's too many puts, that means we can expect a rally, and vice versa. If there's too many calls, we can expect a pullback. Now, I'll remind people who don't really trade options, put means you're betting that the stock market or a security will go down. Call means you are betting that the security or stock market in general will go up. So it's a little bit weird, the reverse in thinking, but just bear with me. So notice here on January 2022, or in late December 2021, January 2022, notice the stock market was coming. These are actually all-time highs right there where I'm hovering. I mean, this is a stock market, S&P 500 down in the bottom here. So we had a record high, well, not record, but very high levels of, notice that the this line is going down, so it means it was in favor of calls. So we had pretty high call volume, a lot of calls, not a lot of puts. So at that point you can see that basically the stock market topped out. So think opposite. If there is a lot of calls, too many people are bullish, people are thinking, yes, we're gonna go through the roof or possibly to the moon. Everybody is buying calls, everybody is betting bullish, calls are going up, okay? Then the market reverses and we have the opposite, okay? And it continued lower. So something of it's not a perfect indicator, obviously, but where I'm hovering right now, in the beginning, or rather at the end of 2022, we had a very high put volume. In other words, people were thinking that the market will just collapse and, we will see a bear market of unbelievable proportions. This just happened, in late December of 2023. Notice the market kind of bottomed in October, but really there was not a lot of optimism still in December of last year. And so a lot of puts. People were thinking that the stock market will continue lower. So more puts, you can expect a rally. It's the opposite. Think opposite. Okay. So we got that. We got a nice, decent rally. What I'm trying to show you right now is that right this instant, the put to call ratio is now again significantly in favor of calls. So more calls than puts currently. In fact, right now, today's levels is 0.873, and this is again a 10-day exponential moving average, is the lowest we have seen since very early 2022 when the market tapped out. Okay, again, think opposite. When there is a low put to call ratio, we can expect a correction. So right this instant, we are thinking that I think that we are overextended to the upside, and I will show it to you on various other charts. So this is my normal kind of layout. On this chart you can see this green, blue, red and yellow lines. These are my proprietary trading indicators, and you can find out more about them by going in the description. S&P 500, this is S&P 500 SPX on TradingView.com. This is a TradingView.com interface, please remember. You can have the same chart on TradingView.com. You can just open a free TradingView account and graph it. So this is S&P 500, the index, and make sure you pick this one, CBOE, and the symbol is SPX. This one broke out into a new uptrend where I'm hovering on 13th of April, the Thursday of this year, 2023. How do I know? Using my indicators, when the security closes above the blue line, where I say that we are now in an uptrend, I want to be buying the security either immediately on a breakout above the blue line or on any pullback towards the blue line. Notice that, right? And then we got a nice big rally, decent rally. Okay, so we're now, a significant distance away from the same blue line. Notice we're right at it in April, and now we're pretty far away from it. So right now, for the past 1, 2, 3, 4, 5 sessions or so, we've been pulling back. So most of this week actually we've been pulling back. I think that looking even at this CBOE ratio thing, notice that where I'm hovering right now, the lowest level was for put to call ratio was like in November of 2021, but the market didn't top out until early January of 2022. So this indicator is not perfect by any means, by any way. However, we need to take things in concert. So right now, I think that we had a big, nice rally, especially since October 2022 lows. Big, nice rally. S&P 500 rallied, from the lows of 2022, over 26%. And I can't say exactly when the pullback will begin. Maybe it has already begun. Maybe we'll kind of pull back towards this green support resistance line, kind of bounce around it, and then rally and make another high. It's entirely possible. In fact, once I get to junk debt, high yield bonds, I'll show you that very short term, we're actually oversold. Okay, very short term. One chart I wanted to show you is that of QQQ. This is NASDAQ QQQ, the NASDAQ 100 ETF. So I've shown this chart in the past. I actually bought it myself back in January of this year, to around 280. So notice this pattern that I highlighted in orange. I just kind of drew it in. So basically, we have this depth of this pattern that began in beginning of 2023 and kind of ended in February of 2023 of this year. Then we traded, down to sideways, and then we broke out again to new highs for the move in early April of this year. And then we continued really big rally, significant rally. So notice that between the breakout in April and today's levels, notice how big this line is, the yellow line, versus this line back here. So usually this type of patterns, so I'm talking about this from the lows in 2023 like January 2023 to highs in February 2023, this depth of this pattern will be duplicated on the upside, but now it's actually more than duplicated. So I think NASDAQ is definitely overextended, and I think it is liable to a pullback. When will this happen? Has it already begun? It's again, very difficult to say. However, I would be, I have already started taking profits. For example, on this position, I actually sold some of QQQ myself a few weeks ago, and I might take more profits just to lock in the gains. Because if we do pull back, I'll show you QQQ. This is NASDAQ with my indicator levels again. So notice how way overextended we are over the green line and even above the blue line as well. If we get a sizable correction, just like a normal small correction would be about, from today's level, about 2 to 3%. But if we get a good, nice, sizable correction where I become interested again, we're looking around 10% drop from today's levels. And at that point, we will say, okay, we're no longer overextended to the upside. In fact, since we're in an uptrend, we would be by then oversold. All right. Oversold within a bigger uptrend means that we want to be thinking about buying. We're clearly not there yet. So let's see, if we get a pullback now, or maybe we'll make another high and then get a pullback. It's entirely possible as well. Very briefly, I wanted to show junk debt, high yield bonds. So high yield bonds and stocks correlate highly. They're doing more or less the same thing. This is JNK. Where I'm hovering on the right here, it says ADJ. That means it's adjusted for dividends. This junk debt is a high dividend or coupon security, and I personally like to adjust it for dividends. If you don't adjust it, the chart would look quite different. Okay, so click. I usually like to see it blue clicked. It says here adjusted for dividends. So it is currently also in an uptrend. Notice this up arrows above the blue line. That means we're in an uptrend. Currently, we have pulled back from highs for the move. We made a high for the move on 15th of June. We did not, unfortunately, break out above this February 2nd high where I'm hovering. We have indeed broken out for S&P 500 above February 2nd highs. Unfortunately, we haven't done it yet for the junk debt. So this is kind of what worries me, is that even though junk debt is in an uptrend, we are not as strong as I ideally like to see. So right this instant, we have pulled back. Junk debt has pulled back towards the first support at the green line. In fact, I think we broke that support. Today we closed below it. So the question is right now, are we going to attempt another high, or are we just going to continue lower? So the second support for junk debt is at the blue support resistance line. That's about about 2 to 2.5% or so. If the junk debt pulls back, that much, I think S&P 500 easily will pull back towards at least the green line, but likely towards the blue line. So we're looking at, for S&P 500, around 5 to 6% pullback. So we're looking at around 250 points pullback if junk debt also continues lower. They usually move together in lockstep. That's why I like to look at junk debt when trading stocks. All right, let's move on to the dollar universe. So dollar has surprised me and some other analysts. Right now, I still think dollar is in a downtrend. Notice this downward facing arrows. When Forex like securities like the dollar, for example, close below the red line, that means we are in a downtrend. However, notice these lows from February, right there where I'm hovering, and then another attempt to go below those lows in April, and they held. They did not break, and then we had a more or less like a bounce along the bottom and a rally. So it doesn't look like this rally is done. We broke below the yellow line, but we didn't really even retest the lows again, and now I have a feeling we are going to continue higher. So I think from today's levels, I think we will continue higher until at least this red support resistance line So we're looking at about 3% higher for the dollar index, DXY. You can't really trade it in the United States. You can trade UUP in the United States. Don't analyze UUP using my indicators, and in general it's better to use the underlying security. Here's DXY, dollar currency index. I think it has room to run to the upside, especially because right now we're looking at USDJPY. So USD on top, JPY, Japanese yen on the bottom. In this case, USD, the top part, is winning this battle, and USD in fact just broke out into a new uptrend. By extension, it's a new downtrend for yen. I'll show you futures in a second so you understand what I'm talking about. In this case, it's a USDJPY security. USD is winning this trade. Up until very recently, notice that we had downward facing arrows here. For example, one right there where I'm hovering in January of this year. That's the beginning of a downtrend. Another opportunity to sell short right there in March, but it was not a successful trade. Okay, in fact, it's a reversal right now. Right now, what I'm looking at is a reversal of United States dollar versus Japanese yen, and that worries me because we trade gold, and when things don't go in lockstep, when, for example, US dollar is winning against the Japanese yen but losing against European currencies, something is off. To me, this is a red flag, and I start to worry. Am I wrong about gold? And I'll show you in a second why that could be an issue, it could be a possibility. But before I get there, before I get to gold, here's the Japanese yen futures on what do you call it, on TradingView.com. The symbol is 6J1 exclamation point. You can just search. You can also go to futures and search for, you know, Japanese or yen there. So there's the Japanese yen futures. Up until recently, right there where I'm hovering, in March of this year, I thought Japanese yen was breaking into an uptrend, but now we're seeing a reversal. So right now, today, rather yesterday, June 22nd of this year, 2023, we're seeing a reversal of Japanese yen into a new downtrend, or continuation of a downtrend. So this bounce, I guess, was very minor. Japanese yen really collapsed since 2021, where I'm hovering, and perhaps it's not done. So that once I get to the dollar, once I get to the gold, is what worries me. So think about USDJPY. USDJPY currency pair is now in favor of US dollar. When you trade gold, you want to have the dollar weak. Weakness of the dollar makes gold strong. Why? Notice this currency pair. This is gold divided by US dollar. So if the lower part of this equation is small, the upper part will pull this currency pair higher up. What's happening is the opposite right now. So notice that we tapped out in May here, and we're pulling back. So this blue dotted line I actually drew in back in April of this year, 2023. A pullback towards the blue support resistance line is now unfolding. The blue support resistance line is currently at around 1900. So that level is quite important for gold to hold. I mean, if the gold doesn't hold 1900, then the next stop is actually quite dangerous for gold. The next stop is 1780 or so. That's the red line on my indicators. That's about $100 down from from today's levels. Actually, not even that far from today's levels. $125 down. So if we get to those levels, that would mean that the dollar has strengthened against not only yen but also against euro and British pound and Swiss franc, etc. Strong dollar is bad for gold. Strong dollar is bad for other commodities, but not as bad. Gold and silver are very sensitive to a strong dollar. So weak dollar is wonderful for gold, but looks like something is off. So once again, last week I actually pointed out that something is brewing, and Japan could hold the key to this, and Japan seems to be continuing to hold the key to it. Looks like Japanese yen is breaking down versus the dollar. So let's see how gold behaves. Very important for gold to at least, you know, kind of try to bottom here at around 1900, and if it does bottom here, then wonderful. If it doesn't, then we will reconsider the entire bullish outlook for gold. You know, it could be that bad actually. And then let's finish up with Bitcoin and cryptocurrencies in general. So notice this purple, or rather not purple, the orange kind of line that this is by hand. I just kind of drew it in. I drew it in on June 2nd, and I basically nailed it. It was funny. I literally nailed the day where it bottomed around the blue line on June 14th, 15th, and it rallied. So right now, Bitcoin just made a new high. This is a 52-week high. Okay, this is obviously good news. Unfortunately, I wasn't able to get in on Bitcoin. I was able to get in on Ethereum. I'll show you my position in just a second. But what I'm trying to show here is this action, this pullback, began when the Securities and Exchange Commission began, actually opened a lawsuit against Binance and Coinbase, and I was like, I'm not sure I want to be even touching the Bitcoin or cryptos right now. But people seem to have shrugged this off, and for one reason or another, the prices of Bitcoin and cryptos are moving higher. So right now, if you were able to get in on Bitcoin around 25, even 25.5, then very good, congratulations. Right now, I wouldn't want to be buying. I would want to be holding, basically, at this point. And here's my position in Ethereum. Like I said, I wasn't able to get in on Bitcoin. I was able to get in on Ethereum. So the same general principle with my indicators. When the security initially breaks out above the blue line, we just buy it. But then when another opportunity comes up, when we pull back towards the blue line. And so we did just that. We actually broke below it on June 14th, but then we rallied and closed above it on June 20th, right there where I'm hovering. I went ahead and I bought at 1744, so like right around the blue line. I'm sorry, 1774, right where I'm hovering. It moved, a significant move higher. My target is not that huge. So the target is, for me, is average true range where I'm hovering. You can just search for indicators called average true range. Okay, don't be afraid. It just means how much does a security move on average. So on average right now, Ethereum moves around $62. This is a daily chart. So on daily charts, Ethereum moves $62. We don't know, up or down. Okay, so all I needed to do is to get about like $180 to $200 move or so, or 160 rather. I'm sorry, 120, $60, 120. So that was my target where I'm hovering. Yeah, so once I got in, 2 average true ranges, and I moved my stop to entry. So at this point, I really cannot lose money. But if it continues higher, then obviously I will make more. So at the very least, right now I'm break even. Maybe I'll take a small profit, then I have a small profit as well. But overall, this is how I trade using my indicators. We buy and close above the blue line, and then we set 2 average true range target, ATR, and then move my stop to entry. If you need any help, let me know. Obviously, you can send me a message. Stay tuned on how to find me on the internet. But if you are watching, please like, share, and make a comment. What do you guys think about the presentation today? Once you're ready, please head over to MasterChartsTrading.com, click on sign up upon the products. I have trading indicators. Like I said, these are indicators. There's green, blue, red, and yellow line available for TradingView.com. Once you open a free TradingView account, it's a TradingView.com interface, I will open the door for you once you sign up on my site. I also send out daily newsletters and weekly members-only video. In fact, this week we will cover all of these various securities. Notice that crude oil, natural gas are covered in the members only video. We're going to cover bonds, various ETFs, and international ETFs, large cap stocks like Goldman Sachs, Nike, Tesla, and quite a bit of various small cap securities such as I call them speculative securities. New breakouts, for example, Hot 8 Mining, IonQ, Aurora Innovation, Cloudflare, Pinterest, and Riot Blockchain, to name a few. We will also cover the gold-related stocks. The best deal, of course, to get both trading indicators and newsletters at $59.95 per month. I think it's a great deal. Okay, again, please don't forget to hit the like button. Thank you for watching and have another great trading week. Bye-bye.